Good evening, class. Good evening, class. Good evening, class. Good evening, class. Thank you. Thank you. Thank you. Thank you. So we are the guys who have been blessed to be in class today. So we fold our sleeve and we start. So we fold our sleeve and then we start. So where did we stop? Where did we stop? So there was a last statement, made a number of statements, just a recap of those statements. That in case of, for example, I'm just reminding us of what we said. We say that when you look at water pumps, when we look at water pumps and generator, we basically say that under manufacturing, we basically grant them investment allowance at the rate of 50% in the first year, 25% on a straight line per annum. That is from the second year on the remaining balance. From the second year on the remaining balance. And lastly, we were saying that in case of, let's say, for example, in case of hire purchase, let's say you buy an asset, you buy what you call an asset on what you call hire purchase. If you buy an asset on hire purchase, the value that basically qualifies, we say that the value that basically qualifies, if you buy an asset on hire purchase, the value that qualifies for investment allowance is what's called the cash price. Cash price is what qualifies. We say qualifies for what you call for investment allowance. Cash price is what qualifies for investment allowance. We say ignore what you call the hire purchase. So what qualifies for investment allowance? It is the cash price. And we do what? We ignore what you call the hire purchase. It is the cash price that qualifies for investment allowance. We ignore what we call the hire purchase. Together, team. What qualifies for investment allowance in case of hire purchase? It is the cash price. So if an examiner brings a question and gives you the hire purchase and the cash price for a fixed asset, the value that definitely qualifies for what we call the investment allowance, we say is the cash price. Cash price is what qualifies for what we call investment allowance. Perfect. So then how do you get investment allowance? We say that investment allowance is equals to investment allowance or wear and tear. In case of wear and tear, we say that wear and tear rate, wear and tear rate, wear and tear rate, wear and tear rate. Then you say times wear and tear rate into brackets, because initial value, we are not using written down value because nowadays they're basically on a straight line. Initial value, then you say plus additions minus what you call the disposals together. This is how we basically calculate what we call the investment allowance for wear and tear. So the wear and tear rate either is 25 or 10% times into bracket. We say the initial value plus what we call additions. These are assets that have been bought during the year. Then you less assets that have been basically disposed during the year together. Then you less the assets that have been disposed during the year. You give me a yes if you're together. You give me a yes if you're together. Perfect. Then say the following values. You say the following values we say are used. We say the following values are basically used as addition, as addition, as addition. We say during what we call the year. So the following values we use them as addition during the year. The following values we use them as addition during the year. One, we say if you buy an asset, we say the purchase cost plus cost incurred. We say before the machine is put to use, plus the cost that is basically incurred before the machine is put to use. We say that the costs that are basically incurred before the machine is put to use, we have installation, i.e., we call it installation cost, installation. We have the taxes, what we call the taxes paid. We have the taxes paid, e.g., we have VAT and what we call the custom duties, etc. VAT and the custom duties, etc. We also have the transportation cost and etc. We also have the transportation cost and etc. So if you purchase an asset, that will be during the year, that will be the value of addition plus the costs that are incurred before the machine is put to use. I have talked about installation, taxes paid, like VAT and the custom duty, but you also have the transportation cost together. We also have the transportation cost together. We respond with a yes, if that is at all. We give it a yes, if that is at all. So then we say the second scenario, say in case of a trade-in, what we call a trade-in situation, in case of what we call a trade-in situation, in case of what we call a trade-in situation, in case of a trade-in situation, the value of the new asset, we say that the value of what we call the new asset. So the value of the new asset, we say that the value of the new asset, brought in, we say qualify as addition. So in case of a trade-in, we basically say that the value of the new asset that is brought in qualifies to be what we call addition, qualifies to be addition together. The value of the new asset that is brought in, that is what is going to qualify as an addition. You give me a yes if you're together. Perfect. Then say, we say in case of hire purchase, in case, we just put in case of what we call hire purchase, in case of what we call the hire purchase, in case of the hire purchase transaction, in case of what we call the hire purchase transaction, in case of the hire purchase transaction, we say cash price, we say is used and we ignore what we call the hire purchase, and we basically ignore what we call the hire purchase. That in case of hire purchase, cash price is used, and we ignore the hire purchase. Then we lastly, as an NB, that is an addition, we say that for SUV and what we call saloon car, for SUVs and what we call the saloon car, for SUVs and what we call the saloon car, SUV, if the value, we say exceeds 3 million, if the value basically exceeds 3 million, we restrict restrict, we say to 3 million. So when you buy an asset, and that is the addition, in case of SUV, those are sport utility vehicle, Mercedes-Benz, Land Cruiser, and saloon car. You're basically saying that if the value exceeds 3 million, we restrict to 3 million. We respond with a yes. We restrict to 3 million. Give me a yes if you're together. We basically restrict to 3 million. Perfect. So then the last part is on the disposal part. The last part is for disposal, we say the following qualifies, we say to be what we call the disposal, qualifies to be disposal value. That for disposal, the following qualifies to be disposal value. Number one, that will qualify to be disposal value, we call it sales proceed. We call it sales proceed of an asset. So the value that you get when you sell an asset altogether, the value that you get when you sell an asset, that will qualify as the disposal value. Together, team, that in case of disposal, the sales proceed, the value that the asset has been sold, qualifies to be the disposal value together. In case the sales proceed of an item, the number two is say for an item stolen, for an item stolen, for an item that is stolen, or we say involved in an accident, for an item that is basically stolen or involved in an accident, we say insurance, we say that insurance compensation, we say qualifies to be what it qualifies to be the disposal value. Make sure those concepts are at the back of your mind. Let's say, for example, you had an asset, and you're saying that, for example, for an asset that is stolen or involved in an accident, the disposal value will be what you call the compensation. The insurance compensation qualifies to be the disposal value. For an asset that is stolen or was involved in an accident, the value that is compensated by the insurance company is what qualifies to be the disposal value. You give me a yes if we are together. That value qualifies to be what we call the disposal value. Perfect. Thank you so much. Then the last item before we get to the question. For saloon cars, then say for saloon cars and what you call the SUVs, for saloon cars and SUV, for saloon cars and SUV, if the value, we say, was restricted, if the value was basically restricted, if the value was restricted, if the value was restricted, when added, let's say, when added, we say disposal value, we say is determined as follows. So if you're disposing an asset that was basically restricted, an asset that was restricted during addition, are we together? So the disposal value should also be restricted. I am saying that if when you're adding an asset, the asset was restricted. It therefore goes that when you're disposing, it therefore goes that when you're disposing, the asset should also be restricted, So how do we get the disposal value in that case? So say that the disposal, we say that the disposal value, i.e., we say disposal value, the disposal value should be, what do you call the sales proceed? Sales proceed, that is just the SP, sales proceed. The disposal value should be the sales proceed over what you call the initial cost. Then you say times restricted value, which is 3 million. Are we together here, team? I want us to understand this. That if basically, we are saying that if basically you are disposing an asset that was restricted when you are adding it together. Therefore, it goes that when you're disposing also that asset you need to restrict. How do we restrict? We say the sales proceed over what you call the initial cost, that is the buying price, then you multiply by 3 million. This will not qualify as what? As the disposal value, but you restrict. What you get is what you get as the disposal value, Tubonyeza yes kama tuko sawa. Tubonyeza yes kama tuko sawa. If you're together, we respond with yes. If we are together, we respond with yes. Perfect. Then I only have to make one statement. In case of trade-in, in case of what we call the trade-in, the disposal value, when you're talking about trade-in, in case of trade-in, the value of the old asset is deducted as the disposal value. We're saying that in case of trade-in, we say that in case of trade-in, lastly, we say in case of what we call of trade-in, the value of what we call of the old, asset, we say qualifies as what we call as the disposal value. The value of the old asset qualifies as what we call the disposal value. So that is done. I want us now to go to the practical work. Is there any question before I get to the practical work? Kuna mtu ana swali? Is there a question? Kuna mtu ana swali? Can I proceed to the questions? Can I proceed to the questions? Can I proceed to the question? Is there any question regarding, we move on, perfect. So I want the first question. I want us to start on the first question. I want us to pick on December 2024. December 2024. I want us to pick on December 2024. December 2024. That is question 4C. December 2024. We start with the first question, deck 2024. Question 4C. Deck 2024. Question 4C. Are we on it? Let's start with that question. Deck 2024, question 4C. Deck 2024, question 4C. If you're there, you respond with a yes. Deck 2024. So perfect. So I want us to read that question. So we're being told, Adam Mwema, the examiner tells us that Adam Mwema, a retired engineer, Adam Mwema, a retired engineer, sets up a manufacturing factory in industrial area on 1st January 2023 to fabricate mechanical and automotive parts at a cost of 44,900,000. At a cost of 44,900,000. So then the examiner tells us the operation commenced on 1st January, that is 2023, except for commercial building, which was put into use from 1st September, except for the commercial building, which was put into use on 1st September. So then you're given the breakdown for the manufacturing. So the breakdown of 44,900,000. Number one, you're being told that the factory building, that is 18 million. Which investment allowance does it qualify for? Factory building. Factory building, it qualifies at which rate? Which investment allowance and at what rate? Factory building, which investment allowance and at what rate? Which investment allowance and at what rate? Factory building. Which investment allowance does it qualify? At 50%, we call it ID, but you say at 50% in the first year, then you say 25% on the straight line, 25% on the straight line. That is from the second year on the remaining balance. Number two, we call it office within factory building. Office within the factory building, how would you treat that? Office within the factory building. Office within the factory building. When you say office within the factory building, office within the factory building, what does it qualify? At what rate? That's a commercial property. So it qualifies for investment allowance at the rate of? At what rate does it qualify for investment allowance? At the rate of, we say at the rate of 10% on a straight line. You mark them. If you have a physical paper, you mark it them. Then the next we have what's called second-hand imported machinery. Second-hand imported machinery. Second-hand imported machinery. Second-hand imported machinery. So what does it qualify for? The second-hand imported machinery. For the second-hand imported machinery, it qualifies for which investment allowance? Second-hand, remember this is manufacturing. The second-hand imported machinery qualifies for ID. We understand at the rate of 50%, that is in the first year, then 25% on a straight line per annum, that is from the second year on the remaining balance. Then you have the next, what you call land. Land, does land qualify for investment? And which investment allowance does the land qualify for? Does land qualify for investment allowance? Does land qualify for investment allowance? Does land qualify for investment? No. Land does not qualify for any investment allowance. So that we are not going to use. The next we have what we call engineer fee for machine installation. What we call the engineer's fee for machine installation. Engineer's fee for machine installation. Engineer's fee, that is ID, at the rate of 50% in the first year, 25% per annum on the straight line, that is from the second year on the remaining balance. The next is what we call the parking bay. Parking bay. Parking bay. Parking bay. What does the parking bay basically qualify? Parking bay. That is also investment allowance at the rate of 50% ID, at the rate of 50% in the first year, 25% per annum on the straight line. That is from the second year on the remaining balance. Then the next we have what we call conveyor belt. Conveyor belt, Matsura. Conveyor belt, Matsura. Brand conveyor belt, what does it qualify for? Conveyor belt. Conveyor belt. Conveyor belt. Conveyor belt. Conveyor belt. So which investment allowance? That is at the rate of 50% in the first year, at the rate of 50% in the first year, and 25% per annum on a straight line, that is from second year on the remaining balance. Then lastly, we have commercial building, and the figure is 10 million. Commercial building, what does it qualify for? Commercial buildings, commercial buildings, commercial buildings, commercial buildings, 10%, 10%. Thank you so much. So I proceed to the additional information. Alan, Ida, thank you so much. I proceed to the additional information. On the additional information, we've been told that commercial building, we are given a breakdown. Commercial building include what we call a showroom. So the figure of 10 million, the figure of 10 million, we can put it as probably working commercial building, commercial. We have it as a commercial building. The figure is 10 million. From 10 million, this one includes what we call showroom. So we have the showroom. We have what we call the showroom. And the showroom and retail. Showroom is 2.8. 2.8. Then we have what we call retail shop. What we call the retail shop. So retail shop is a figure of 3.2. So what is the figure for the commercial building? What is the figure for the commercial building? What is the figure for the commercial building? So what is the figure for the commercial building? If you less that, what is the figure for the commercial building? So when you less that, what is the figure for the commercial building? Because this figure is inclusive of a showroom and retail shop. So what is the difference? Is the difference 4 million? Is the difference 4 million? Perfect. Showroom and retail shop, they qualify for investment allowance at what rate? Showroom and the retail shop, they qualify for investment allowance at what rate? Showroom, they qualify at 10%. At 10%. So that is announced. So then you're being told that factory building include a warehouse. So there's a working two. We have the factory building. What is the figure for the factory building? What is the value for the factory building? What is the value for the factory building? What is the value for the factory building? What is the total value for the factory building? So that was a figure of 18. We had it as 18 million. But we've been told that on this building, on this factory building, there's what we call, there's a warehouse. So we need to less that warehouse. We need to less that warehouse. And the figure is 2.2. The figure is basically 2.2. So what is the factory building? The figure for the factory building. What is the figure for the factory building? The figure for the factory building. Give me the figure for the factory building. Provide me the figure for the factory building. Provide me the figure for the factory building. The figure for the factory building. Provide me with the figure. So this is 15,800,000. Aida tuko sawa? Either are we together? Perfect. Abia. Editor up, we're together. So this warehouse, what will it qualify for? If we list it, warehouse will qualify for? The warehouse will qualify for investment allowance, that is IBD. We understand that 10% at 10%. IBD at the rate of 10%, at the rate of 10%. IBD at the rate of 10%. So we proceed to the next. The examiner tells us that additional information number 3, a building that had been constructed, a building that had been constructed, a building that had been constructed at a cost of 12 million was leased to Juudi Manufacturers Limited. A building that had been constructed for a figure of 12 million was leased to Juudi Manufacturers Limited for 5 years. So being told that annual lease rental was agreed at 2.2. Adamil Mwema imported the machinery from China at a cost of 5.2 and installed it in the building and started operation. Do we grant investment allowance for the building that you've leased? Do we grant investment allowance for the building that you basically leased? Do we grant investment allowance for a building that you have leased? Do we grant investment allowance for a building that you basically leased? Either. Do we grant investment allowance for a building that you basically leased? No, we don't grant. That's why if you have options, in order for you to qualify for investment allowance, you buy instead of leasing altogether. If you want to qualify for investment allowance, you buy instead of leasing. Are we together? If you lease, you're only going to be entitled to what we call the lease rental, rentals as allowable expense. But if you have the option to lease or buy in order to qualify for what you call investment allowance, in order to qualify for the investment allowance, in order to qualify for the investment allowance. However, what about the imported machinery of a figure 5.2? Is it going to qualify for investment allowance? The imported machinery for 5.2, is it going to qualify for the investment allowance? Is it going to qualify for the investment? Yes, that imported machinery is going to qualify for the investment allowance. Yes, that is going to qualify for the investment allowance. So that is sorted. All of us, are we together? All of us, are we together? Perfect. So then I proceed to additional information number 4. So the examiner tells us to improve the performance of the factory. We are being told that to improve the performance of the factory, Adamil Mwema computerized operation at a total cost of 15 million. Adamil Mwema computerized the operation at a cost of 15 million, out of which 30% was software related. So out of which, so we have computers, and then we have the softwares. We have what's called the software. So the figure is 15 million. But the examiner tells us that basically 70% was the computer. So 70% times 75% times a figure of 15 million. So what is 70% times a figure of 15 million? Because that's what 70%, then 30% was in relation to software. 30% was basically in relation to the softwares. 30% was basically in relation to the software. Just a minute. Give me a few minutes. Sorry for the interruption. Sorry for the interruption. So then, 70% is basically in relation to the computers. So what is 70% of 15 million? Give me 70% of 15 million. 70% of what I call 15 million. So that should be 10, 10, 500. What I call the 10, 500. We have it as 10, 500. What about the 30% that is in relation to the software? 30% that is in relation, that should be 45. That should basically be 45. So computer software and computers, they qualify for investment allowance. Number one, computer and computer software, those are wear and tear. At what rate? Those are basically wear and tear at what rate? Wear and tear at what rate? At the rate of 25%. At the rate of 25%. Training at the rate of 25%, not 10%. Training that should be wear and tear at the rate of 25%. So then the examiner tells us on additional information number 5 that the following assets were also purchased. The following assets were also purchased. We say on 1st July 2023. Number one is furniture and fitting. Number one is furniture and fitting. What does it qualify for? Furniture and fitting. 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 What does furniture and fittings qualify for? Investment allowance at the rate of 10%. Investment allowance at the rate of 10%. At the rate of 10%. What we call investment allowance at the rate of 10%. At the rate of 10%. The next is the second-hand BMW vehicle. Second-hand BMW vehicle. What does it qualify for? The second-hand BMW vehicle. The second-hand BMW vehicle. The second-hand BMW vehicle. 25. But what do we do to the BMW? There's a concept that we have not remembered. What do you do? The BMW Nini, that's an SUV. So what do? We restrict to 3 million. The amount that is going to qualify for wear and tear should be, that should be 3 million. We restrict to 3 million. Then the next, we're being told that 4-ton lorry, a figure of 1.8. 4-ton lorry, a figure of 1.8. The 4-ton lorry, figure of 1.8. What does it qualify? 4-ton lorry. A 4-ton lorry. Investment allowance at what rate? At the rate of 25%. Thank you, Gauba. Then we have the next, that is what we call the backhoe loader. Backhoe loader. What do you call the backhoe loader? So backhoe loader. What do you call the backhoe loader? Backhoe loader. The backhoe loader. At what rate? That's wear and tear. But at what rate? Wear and tear 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 at what rate? Not 10%. Backhoe loader, that should be 25%. Note it as 25%. as 25%. As 25%. Either that should be 25%. Is that okay? Either that should be 25%. Either is that noted? Either that should be 25%. That should be 25% together. That should be 25%. Matsura, that should be 25%. So then we have the next is mobile crane. Mobile crane. Mobile crane. So the mobile cranes. Mobile crane. Mobile cranes. Mobile cranes. Mobile cranes. Mobile cranes. Galma, why did you say that? Mobile cranes. That's not a trailer, the smaller trailer. Mobile crane. Mobile crane. Galma, you are missing it. Mobile crane. Mobile crane should be 25%. Team, that should be 25%. 25% together. Mobile crane should be 25%. 25% together should be 25%. 25%. Tuko sawa. To give me a yes kindly. Then lastly, we are being told that the factory, the examiner tells us that the factory staff labor quarters were constructed during the year at a cost of 2,250,000 and put to use on 1st October 2023. Factory staff quarters. How do you treat the factory staff quarters? How do we treat the factory's staff quarters? Factory staff quotas. That's IBT at the rate of 10%, 10%. At the rate of 10%. I know you wonder why I chose on this question. I particularly chose on this question because people did not perform well in this particular question. This is one of the questions that was poorly performed. So before I put it down, we're not going to break before we finish. Before we put it down, please, you see there's wear and tear here, number 5 from 1st July. And we have the labor quota that is for the IBD. We are being told that from what? That is from October. We don't apportion. Please don't apportion. Please don't apportion. Is that okay? Do not apportion. Claim the whole amount. Claim the whole amount. Together. Do not apportion. Claim what we call the whole amount. Do not apportion. Claim what we call the whole amount. Do not apportion. Claim what we call the whole amount. So do not apportion. Claim the whole amount. Is that point at the back of our mind? Pardon. Is that point at the back of our mind? Perfect. If that point is basically at the back of our minds. If that point is basically at the back of our mind. So when it comes to investment allowance, I can use 2 methods of doing it. I can separate them or I can use them as a whole. I've said when it comes to investment allowance, I can basically separate them or I can do what? I can separate them or I can carry out investment allowance as a whole, together team. Then I can decide to just accumulate the whole amount and carry out the investment allowance. Or I can decide to do them separately. Or I can decide to basically do them separately. separately. Are we together? So the both methods, I will apply them. But for this first question, I will do it separately. For this first question, I will do it separately. We don't prorate. We don't prorate. Don't prorate them. That's why I'm doing this question, Galma. Yes, because majority of the students failed in this question. And the reason why they failed is because they prorate this. So then we don't know that Adamil Mwema, we call it the Adamil Mwema, and we understand that this is investment, allowance save for 2023. Adamil Mwema, and we have what's called the investment allowance for 2023. Adamil Mwema, and then we have investment allowance for 2023 together. That is what the examiner compute investment allowance due to Adamil Mwema. So the first method, I am doing it separately. So I start with ID. I call it ID. So investment deduction at 50% in the first year, 25% per annum on the straight line, that is from the second year. So investment, we call it the investment deduction. We call it the investment deduction. We call it the investment deduction. So we separate them. So say nature of the asset, nature of what we call the asset, nature of the asset. We have the qualifying cost. Nature of the asset, we have the qualifying cost. We have what we call the ID rate. We have the ID rate. And then we have what's called the ID amount. And then we have what's called residual. That is the balance. Though not necessary because they're not moving to the second year. So we start with the first item. The first item is what's called the factory. We have it as the factory. We have it as the factory building. So what is the value for the factory building? Factory building from our working. What is the figure for the factory building from our working? Nataka watu wakuwe rada. Factory building. Tumepata ngapi? From our working, the figure for the factory building, that is 15,800,000. The ID rate for the first year is 50%. So what is the amount? 50% of that is what figure? 50%. How much is 50%? ID amount, 50%. Watu wangu, 50% of that. Chukua calculator na ufanye. That is 7.9. 7.9. So then the residual is 7.9. So that is the first one. So next is what we call second-hand imported vehicle. What we call second-hand. We call it imported vehicle. So the second-hand imported machinery, sorry, not vehicle, machinery. That out. Machinery. That is 4.4. The figure is 4.4. What is 50% of 4.4? 50% of 4.4. So 50% of 4.4, that should be 2.2. That should basically be 2.2. This is 2.2. That should be 2.2. 2.2. Then we have land does not qualify. We go to engineers fee. We call it engineers. Engineers fee. We call it for installation. So why do we put there? These are the costs that are incurred before the machine is put to you. These are costs that are basically incurred before the machine is put to use. So that is 1.4, 50%, 700. Then we have a figure of 700. Then we have a figure of 700. Then we have what's called the parking bay. Parking bay. We have the next what's called the parking bay. So parking bay is a figure of 900,000. 50%, 950%. We have for 50, and then the balance is for 50. I hope we are moving on well. Then you have conveyor belt. So the conveyor belt is 1.4. 50% of that should be 700. 700. That should be 700. So conveyor belt, we have 1.4, 50% of that should be 700. We respond with a yes. That should be 700. Together 700. That should be 700. Tuko sawa. Kuna mtu ako nyuma. Is there anybody behind? So commercial building, those are not ID. So we turn the pages. So the next ID is what we call imported processing machinery. Imported. We call it imported processing. We call it machinery. So imported processing machinery, the figure is 5.2. Are we in agreement that the figure is 5.2? Are we in agreement that the figure is 5.2? Are we in agreement that the figure is 5.2? Imported machinery. Are we in agreement that the figure is 5.2? 5.2. If we are, then that should be superb. So that is 50%. This should be 2.6. 2.6. The balance is 2.6. Is there any item for ID that we've not added? Is there any item that we've not added? Is there any item that I've skipped? Is there any item that I've skipped? Is there any item that I have skipped? Is there any item that I have skipped? Is there any item that I have skipped? So there's not an item. So we call it, this is summary, we call it the total ID. So what is the total summation for the ID amount? Total ID, summation for the ID amount. Total summation for the ID amount. Tafadhali. Total summation for the ID amount. Total summation for the ID amount. So somebody gets it 14,550. 14,550. So that is the total for ID amount. What are the entries? Is in your answers 1, 2, 3, 4, 5, 6. Those are the entries together. So then I proceed to the next. I proceed to the next. I proceed to the next. So the next is we can go to the IBD. Those are industrial building deduction. IBD we know at the rate of 10%. At the rate of 10%, we have what we call the nature of what we call asset. So nature of the asset. We have qualifying cost. We have the IBD rate. We have the IBD rate. We have the IBD amount. And then we have what we call the residual. And then we have the residual. So on this, we have office within the building. So we have office. So the qualifying cost for office, that should be 800,000. The rate is 10%. What is that? The rate is 10%. What is 10% of that? What is 10%? Give me that. What is the rate? So that should be 720. That should be 720 as a balance. The next we have commercial. We have the commercial building. So commercial, throughout our working, we divided that was 4 million. So 10%, don't apportion. You don't apportion 10%. So that is 400. Together. Tuko sawa. And today you're not responding. Are we together? Training. Tuko sawa. Training tuko sawa. Matsura tuko sawa. Brian, are we together? Kindly, when you don't respond, we are losing it on learning. So then the other breakdown, we had what we call, we had the showroom, 10%. So what is the difference as residual? 2.8 minus 2.8. Give me the difference. Then we have what's called a tail shop. %, that should be 320. So give me the balances. Monopatia is the balances. $2 million. What about this? Is it this? Is that the figure? 2,880,000. Is that the figure? 2,880,000. Nimeshukuru, asante. So then we have what we call the warehouse. Warehouse. We had the warehouse. So what is the residual? What is the residual? What is the residual? Residual ni ngapi? Watu wengi wamekataa. Is it 1980? My people have rejected me. Are we having that? Then you had the staff quarter, labor quarters. Labor quarters, 2,250,000, 10%, that should be 225. So 225, what do you have? $20.25. So get for me the summary. Total, give me the total. IPT amount. Nipatie hiyo figure. Alphabet is 80, 400 to 80, to 20 to 20 to 25. That is a figure of 1,525,000. So these are the entries. That should be okay. Those are the entries. Tuko sawa? Munipatie, yes. Galma, kindly don't prorate. I've said kindly don't prorate. Prorate. What have I said? Kindly don't prorate. I have insisted, Galma, kindly don't prorate. Particularly for this question, the reason why students that in this particular year failed this question, because most of these questions, particularly this was the prorated, which get a Galma. Because of apportionment or proration, that's why majority of the students failed in this particular question. Yes, that's why majority, I will always tell you, because lazima tujenge wanafunzi wetu. Is that true, Galma? We must assist our students and make sure that they perform together. So don't prorate. Why did they fail in this? Because of that. That's why I insist, if you're looking at this, what people are doing in the internet, follow what I say. Are we together? You can check other things, but this one, just follow what I tell you. Yes, just follow what I tell you. Can I have this? Can I run? So that we do the last part of it. Can I run? So, Ida, in my class, that's what I told you, particularly for this, Ida, you don't prorate. With the changes that were expected, you don't prorate. Ida, don't prorate kindly. Sawa, Ida. Yes. Mwalimu atakutetea. No, I'm joking. Yes, don't follow what I say. Just follow what I say. I cannot lead you to a wrong direction. Mwalimu will always lead you to the right direction. I know that's a concept that majority, you pick a paper, especially a paper like this, and then you realize it because they prorate and then they miss marks on that. So then we go to wear and tear. I said these things can be done in one, can basically be done in a single. Are we together? We can do this, Galma. We can even do this as a whole. We don't need to separate, but I said we separate. Then the next question we'll do as combined together. We do as combined. So we have the last one that is wear and tear. The last one is wear and tear. The last one is wear and tear. The last one is basically wear and tear. So the last one is basically wear and for the last one is wear and tear. So we have what we call wear and tear, where WTA. So that is wear and tear. WTA, that is wear and tear. So we have what we call nature of what we call asset. Asset. What we call the nature of asset. We have the nature of asset. We have qualifying cost. Qualifying cost. We have what we call wear and tear at 25%. We have wear and tear at 10%. Then we have residual. Then we have the residual. Hapo tuko sawa. Hapo tuko sawa. If you're there, we pick the first one. So we have the furniture and fittings, furniture, and what we call the fittings. What we call the furniture and fittings. So the qualifying amount is 620. So the qualifying amount is 620. That is wear and tear at 10%. So what is 10% of 620? We understand not here. 10% of 620. 10% of 620. That should be 62. So 620 minus 62, what is the residual? 620 minus 62. 620 minus 62. 620 minus 62. Don't know the math because even if you put it residual, but we put it, that's not where the max is. So that should be 588. So then we move to the next, we have second hand and BMW. So we say restricted. So the figure is restricted. So we restrict it to 3 million. We restrict it to 3 million. That should be wear and tear at 25%. So this is a dash. So this should be 750. So 750 minus 3 million and 5% is 750. What is the difference? We restrict because that's an SUV. SUV. So you restrict. SUV, restrict, restrict, restrict. So this is 2 million. Should be 2,250,000. So then we go to 4-ton lorry. 4-ton lorry. What do you call the 4-ton lorry? So the 4-ton lorry was 1.8. So what is 25% of 1.8? 25% of 1.8. 25% of 1.8. What is 25% of 1.8? 25% of 1.8. 25% of 1.8. Now I'm about this idea and your figure. So then that should be 450. So what is the residual? That should be 13. We have it as 1350. We have it as 1350. Then the next we have what we call backhoe loader. Backhoe loader. Backhoe loader. So we're having a figure that's 680. So what is 25, 20? Oh, 558. Thank you. 558. So what is 25% of 3680? 5% of 3680. So that is 920. So what is the residual? Residual ni ngapi if you less that? Residual ni ngapi? That's okay. Then you have the next, we have the mobile crane. So the mobile crane is 1 point. What is 25% of 25% of that? And 5% of that. So 475. So what is the balance? What is the residual? Perfect. So then we have computers and computer, that is 10. Then you have the computer software. But some people are doing it them as a whole. Some people are basically doing it as a whole. Some people are separated. So what is 25% of 10? 10% of 10, 500. What is 10% of 10, 500? So that's 1425, say 1425. Balance, what is the balance? So what is the 25% of that? Of 4.5. 25% of 4.5. 25% of 4.5. Computer is 25%. Computer is 25%. Galma, computer is 25%. So this should be. So what is the residual and residual that? Ngapi hapa? Somebody lied to me. Somebody has already lied to me there. Huh? So what is the balance? So get our summary. Summary for this, then we do the summary for the whole thing. add those. So you're saying the figure is 3375. 33. Is it 3375? Hey guys, I'm saying this addition. I don't think so. So that's 6345. So Galma, are you able to see this, particularly Galma and Ida? The students who basically prorated, that is IBT and wear and tear, they got 0 in all this thing. Are we together? Ida and Galma. For those students who basically prorated or apportioned, this particular question they got is 0. Are we together? Because this was now, because it was from 1st July, this got 375, this was 225, this was 460, this was 237, this was also this one was for the whole year. So maybe this was the only thing that the student got. What are the entries? 1, 7, 8. Then you do the summary. We can now have the summary. So what ID? ID was how much? IPT, then wear and tear, 5. Then we have what's called wear and tear 10%. So what was the figure for the ID so that we have our summary? Figure for the ID. ID ilikuwa ni ngapi? ID ilikuwa ni ngapi? ID ilikuwa ni ngapi? So that's 14 by 15. IPT was how much? IPT was how much? IPT was how much? IPT was how much? That was 1525. Then this is 63, 45. So get for me that summary. Get for me the summary. Do for me that summary. Summary, get for me the summary. So it's 22,482,000. So look up, hapa tuko na inchi ngapi? 2, 3, 4, 5, 6, 7. So 7, we add 7 plus 7 under, then plus around maybe 3. So any 1 times, the question was 12, 1 times any 12? 12. 1 times any 12. Is that understood? Has it been understood? Is the question understood? That is how we have it. But I was particularly saying that this information, I can be able to combine all these things. Are we taking and do it as one? Are we taking them? I don't have to separate them. I can as well decide to combine that information and carry out what we call the investment allowance. I can as well carry out, combine the whole thing and carry out the investment allowance. So we can have our break now. We can have our break, then we come back. Is there any person who has a burning question? So God bless you once again. Keep safe and have a great, great, great evening. And for my audit students, I was requesting that we meet in the evening at 8. Jaffa, I don't know whether Jaffa has indicated, but I was requesting that instead of early morning, we meet at 8 to around 9:30, 10. That is for the audit students. As Jaffa deliberates with you people, note that Malimu is requesting that tomorrow, instead of meeting very early in the morning, we meet at around 8. So you can go, you can do your personal studies very early in the morning, then we meet at 8 in the evening. Jaffa, he was supposed to communicate that. So we close it there. We close it there. We close it there. Thank you.